Hello, hello, hello. How's it going, everybody? Good morning, good evening, good night, depending where you are in the world. Welcome to a Capital Hungry Monday Market Analysis webinar, where I will be giving you a fundamental and technical breakdown as well as intraday trade ideas on gold, GBP JPY, GBP USD, EURUSD, USD Cad, as well as US 30 stock market index in that order that I just was describing. Okay, please make sure you guys read the YouTube description, as well as do me a favor, like, subscribe, turn post notifications on, and share the stream around. Free to do, doesn't hurt, and let's get into it. Okay, so before we jump into the analysis, we always like to review the economic events and fundamentals in play that are impacting market sentiment and overall financial market order flow, right? So in terms of economic events, we don't have anything to worry about during our Asian session or London, but in the morning tomorrow at 10 a.m. Eastern, we have both the US Consumer Confidence Report as well as the US New Home Sales Report. So this is going to bring some volatility and have an impact on the US dollar, US equities, and gold. And I'll be talking about that when we do our analysis on gold, dollar pairs, and of course the US stock market index. That's the only set of economic data during the New York trading session. And then the following Asian session at 8:30 p.m. Eastern is the Australia CPI to get some more information about inflation figures regarding the Australian economy. Recent fundamental points that are in play and are having a major impact on the respected trading instruments that we trade day after day is understanding that the world reserve currency, the US dollar, is having a pullback from its highs and is currently in some intraday bearish market structure, as we're having a profit taking by buyers at intraday highs printed and at a key weekly level, and just a pullback to retest better demand areas. So we have to understand, with that potential dollar softness and it being the world's reserve currency, we've seen a strong correlation with pairs such as GBPUSD and EURUSD having a pullback from their higher time frame low points, and USD Cad being in some strong intraday bearish market structure as well, with oil being extremely bullish at $80 a barrel, giving the Canadian dollar a lot more strength too. Another fundamental point is that macro optimism is still intact in terms of investor sentiment. This is relatively easy to identify, as the Japanese yen, safe haven currency, still is bearish in terms of market structure and technicals, as well as the volatility index is bearish, and global stock markets are bullish and look to continue bullish to squeeze out gains and continue the greed train until the end of the year. Something else we want to understand, and I'll be talking about that when we do our gold analysis, is that at the end of the week last week, Jerome Powell was speaking, and this was on Friday towards market close hours in the afternoon, and they were talking about tapering to come, but also discussed how everything up to this point in terms of tapering has already been priced in by the market. And I'm going to show you and identify that in terms of the impact it had on gold and the US dollar, and how we're going to understand that information of a lot of the tapering process being priced in to this point so far, and how we can use that to our advantage. Later in the week, we have a lot of central bank monetary policy statements from Bank of Canada, Bank of Japan, and Euro Central Bank. So make sure to keep an eye out for that. And there is no fear, uncertainty, or doubt to shift us out of this current market sentiment. Okay? So here, when we're looking at the US dollar and primarily understanding that it's the world reserve currency and how strong the correlation is for it, we can see the way this pair trends. As we have these highs printed by buyers, we get these very aggressive pullback phases to better demand zones before continuing up to the upside. So you can see for about the last week, week and a half, after these highs were peaked and we failed to break higher, we didn't have enough buyer order flow to continue up. So we had some profit taking, sellers come in and take play, and starting to push price down to a more favorable potential demand point. Now, we started to create a support at the end of last week and at the start of this week with a pretty aggressive upside move, but still didn't break above the last previous low point here, maintaining the bearish corrective market structure when we're looking at the pullback area. So when I'm looking at the dollar index on the 4-hour chart, if this new daily candle fails to break above, if this new daily candle, and obviously when we're looking in terms of price action, if we fail to break above the 93.9 price point, then there's a lot of potential for us to drive back down to these lows and continue to play dollar softness. So when we're looking at the dollar, the way we played this pullback, which was also described in last week's market update webinar and through the Capital Hungry private channel as well, that was all great. But we have to understand that this is just a pullback phase from the highs, and the higher time frame dollar is still bullish. So we had a bit of a support created here in an upside move, potentially looking to break bearish market structure, but bearish market structure is being validated by this last price point of significance around 93.9. So when you're looking at the price action on the dollar, we have to understand that if this new daily candle does not break above 93.9, then we still have the potential to set up better risk versus reward buys and continue the bearish corrective structure on the dollar, which if we have that softness on the dollar and weakness on dollar index USD, then we're still going to be looking to play GU buys, EURUSD buys, and UCAD sells in the short term. So this is a very significant price point of interest on the US dollar at 93.9, the same time GU, EURUSD, and UCAD are at significant price points of interest as well, right? So that's something we're going to have to keep in mind, and I'm going to come back to this, so keep that in mind when we start to talk about our UCAD, EURUSD, and GU analysis. But other than that, dollar is still in this potential pullback structure. The key make or break area in terms of price point, technically we need to break above to validate dollar strength back into the table, would be above 93.9. If we stay below there, we're still relatively bearish in the short term on our dollar sentiment. Japanese yen, also very bearish in overall structure standalone as a safe haven currency as markets remain optimistic. You can see we had new lows printed last week, the same time GJ printed new highs, and we had a pullback phase from the lows that went to retest the last previous lower high point around 88.3 and 88, and is still failing to break above that price point. So as long as the Japanese yen on the intraday time frames doesn't break above 88 and 88.5, we're still in a bearish bias on the Japanese yen. Volatility index showing fear or optimism within the US markets is still relatively bearish, showing a lack of fear, a lack of uncertainty, a lack of doubt, and overall market optimism still holding. As we can see, global stock markets still bullish across the board in all regions. Okay, now keeping that information in mind and some of the economic data we have tomorrow, let's start off with some analysis on gold here and understand why gold has been in this potential intraday bullish channel and structure since the start of October and the start of the new quarter. Number one, the fundamental factors. Number one, a lot of the process of tapering signals have already been priced in by the market from previous FOMCs. Number two, overall macro inflation in the US is still a risk and relatively high, so we still have money and a liquidity being pooled into gold. Number three, we also have the US dollar relatively softer as well. So we can see with the US dollar relatively softer, fundamentally just having a pullback from its highs, inflation still a risk within the US economy and higher, as well as a lot of the tapering confirms being priced in. We can see that gold has been in this ascending channel, overall bullish, printing intraday highs, but we also want to deduct that we've been having very aggressive pullbacks within this overall ascending channel as we have been trending bullish, right? And something else I want you guys to understand fundamentally is this downside move here came last week on Friday when Jerome Powell started to discuss further tapering signals and so forth to come in, right? And you can see that the tapering talks by Jay Powell on Friday had an impulsive downside move on gold and a short-term upside spike on the dollar. But what you want to understand is the market impact. Even though we had this impulsive spike down from what Jerome Powell said on Friday at the end of the week, you can see that it still came from a high being printed by buyers, and the downside spike still failed to break previous lows or overall ascending bullish market structure in this fashion, right? So that just gives us further fundamental confirms that a lot of the tapering by the Feds has been priced in up to this point until we get more confirms that they're actually going to start the tapering process or start to give signals to future rate hikes to come if US economic data continues to rebound. Okay, so some takeaway points that we understand with gold. Right now, we are short-term fundamentally bullish with inflation still being relatively high, US dollar pullback from highs, and a lot of the tapering being priced in, also confirmed by Jay Powell last week, and the impact being very short-lived and still being respecting bullish market structure. Okay, something else though we have to be very mindful of. We are going to be looking for buys and continuation buys on gold, but we have to understand that as gold has been in this higher time frame consolidation on the weekly time frame and on the intraday time frames in this bullish ascending channel due to the factors stated, as we peak highs, we have very, very aggressive pullbacks. So if you play gold right, and accordingly and understand the transactions between buyers and sellers, what we can anticipate is that every time we print a high, it's a pretty reasonable range above the previous high. This was the previous high. We peaked into these highs here. This was the new high. We peaked into these highs here. This was the new high. We peaked into these highs here. So just based on estimations and how we're trending, I can still see gold potentially come up to 1820 as long as we remain above this previous high here at 1803 before potentially seeing an aggressive pullback phase in this overall channel before continuing up. Does that make sense to everybody so far in terms of gold analysis, the fundamentals, the US dollar correlation, why it's been bullish since the start of October, and the way buyers and sellers are behaving in terms of their transactions that create these very aggressive pullbacks and waves? So what I'm saying is, in this market structure, you can make money as a bull, you can make money as a bear, but if you are a greedy pig, you're gonna get slaughtered. All right, so now let's zoom in more and look at some potential trade ideas. These are the trade ideas I see on gold with the factors I just told you guys. Number one, if we retest 1803 and still remain bullish, I still see buys up to 1820. Also buys if we break above 1812 to 1820. These are the safer buys above the previous high and above 1803. Okay? At 1820, I potentially see some high risk, high reward sells, just in the way gold has been behaving overall. You can see we have these very, very aggressive pullback plays, like I just am reiterating again. Every time you have these intraday highs printed, you have this profit taking by buyers and sellers come and take over, but it doesn't break the overall structure. Okay? So I'm looking for high risk, high reward sells at new highs being peaked, or if we break below 1803 and then come below this medium term zone, which is at 1799, 1800, which is the previous high here, I'd only be looking for sells from current price points if we break below 1800. Okay? And in this area, after having this potential pullback, I'd still be looking for buys. So this is the pathway of price I see as long as we maintain the current market structure, movement on the US dollar, as well as if US economic data stays relatively softer. If we pull back to 1803 or even the previous highs here and still fail to break, then we're going to see a potential continuation to the upside. If we break above 1812 as well, I also see buys. I see potentially high risk, high reward sells at 1820. Or if we break below 1800, I see sells. And I would still see high risk, high reward buys at 1789. Did Jay Powell say tapering is already priced in, or are you assuming that? That is here. That was from Friday. At the end of the week last week, that caused this. When gold printed new highs here, right? Jay Powell came in to talk about the communication on taper has worked. Now we can allow the market to heal and so forth, talking about the risk of inflation and so forth. So when he discussed tapering at the start, it caused this initial downside spike on gold from a new high being printed. But what you have the 4-hour candle closing extremely weak bearish body with a liquidity grab at a retest of bullish structure at 1781, and that seller move getting faded out with buyers still continuing up to that high. Okay, so that was on Friday. You can probably find the headlines on the Capital Hungry News Twitter as well. Communication on tapering has worked. I think that was, yeah, those were the headlines there on Friday. Yep. All these headlines when Powell was talking on Friday, that's what that move was there. That's what I was explaining at the start of this webinar, but just for a reference point, you can go Google that too. Okay. So anyways, one more time there. If we hold above 1803, buys above 1812, potential high risk, high reward sells from the 1820s area. Or if we just cleanly break below 1800, I'd be looking for sells. But still to set up high risk, high reward buys at a retest of 1789 and 1795. This is the pathways of price I see on gold, and the trade ideas I'm also going to be looking for within the private channel and so forth. I'm on a personal short-term gold bullish bias with the weakness in the US dollar, with inflation still being high from a macro perspective and tapering being priced in, confirmed by the Feds last week. But as I'm in a bullish bias, using the technicals in front of me, I have a very strong understanding that over the last month, as this quarter has started off, as gold has been overall making its way to the upside, I personally do not want to just be stuck in the buys as we have these large 200, 300, 400 pip pullbacks. I want to trade this trending market accordingly. Either just wait for the pullback buys or continuation buys and stay out when the sells are happening, or play it both accordingly. Okay? Right now, we had this high printed here. We had an aggressive pullback phase induced by the Fed sentiment, got quickly faded out with buy orders collected from this liquidity zone, and you can see we continued right back to this high so far, with potential to go up to 1820s before maybe seeing another sell-off. Okay? Now remember, you guys can always re-watch this as you need and accordingly, okay? So now we're going to go on to GBP Jpy analysis. GBP Jpy. Let's go on the daily because I want to show you guys exactly where this pullback went to. So you can see we had a very strong bullish rally off this daily demand zone at 149, which I've talked about in multiple webinars. We break out of the corrective structure after having this buy orders collected here at the start of the new quarter, make our way and break above the previous highs. As we had new highs printed by buyers and Japanese yen also do a pullback from its lows, you can see GJ did a pullback, but the pullback conveniently went to retest previous high price point. So overall bullish market structure, bullish bias is still very much intact, right? On the intraday timeframes, all we've had GJ do is push to the upside, have pullback phases, consolidation zones, and potential continuation moves to the upside, maintaining the integrity of the bullish market structure, the same time that fundamentally We have rate hike rumors by the Bank of England over the last couple of weeks. UK equities are still sitting at all-time highs, showing investor confidence strong within the UK markets. And the Japanese yen individually is still bearish. But at the same time, the Japanese yen printed a new low and had a pullback from its lows to retest that lower high, is the same time GBP JPY printed new highs and had a pullback to revisit those previous daily highs. Okay, but what is the current phase that GBP JPY is in terms of market structure? Are we in a consolidation phase? Are we in a pullback phase? Or are we in a potential continuation with trend phase? Quick pop quiz. When we're looking at market structure, very easy to identify bullish market structure. But clearly we've seen some profit taking by buyers at highs, right? Now, what phase are we in terms of the technical observation of market structure? Are we in a consolidation? Are we in a pullback? Or are we in a potential continuation phase, back bullish phase? We are in a pullback phase, right? But the good thing is that this pullback phase so far is this 156 price point is the previous daily highs. So as long as we maintain over 156, I'm looking for potential breakout buys of this pullback structure after we verify that buyers are in the market to go to revisit these highs as target points. Remember, the market can only move up in two fashions, regardless what currency pair, oil, commodity, stock market, doesn't matter. You're going to have, if it's a bullish trending market, you're going to have buyers enter from a demand point, drive price up to a specific supply zone and price point of interest, profit take from that high. As they profit take, they get relieved out of the market by sellers jumping in hand. This also drives price down to a more favorable demanded price point where the sellers get to take their piece of the pie, the buyers get to exit the market. Then as you enter a more favorable demanded price point, more buy orders get collected and you continue in this trend. Or as you have a high printed, you have a consolidation zone, which I just see as order flow collection and then a breakout of the consolidation zone and continuation up. If you dissect market structure this fashion, regardless what you are looking at and looking at previous price points of interest for retest points, it's very, very easy to deduct the buyers and sellers transactions. So when you're keeping it very simple here on GJ and you're looking at this overall market structure, that's all you have seen. When you're keeping it very simple, you're still maintaining the integrity of the overall bullish market structure and not breaking the market structure. And once we have enough buy orders collected from this point, we can anticipate a revisitation of those highs and potentially higher, right? So it's very simple in that sense. So with that being said, we were playing this pullback structure accordingly last week. We were scalping this bearish pullback structure because what we were able to identify in terms of a correlation and understanding was that the Japanese yen by itself, the yen currency index, was also printing a new low and potentially entering a pullback phase. But when we zoom in and look at the currency index on the yen here, as long as the Japanese yen individually doesn't break above this price point of interest, we're still maintaining the intraday bearish market structure and sellers in play with the potential to continue down to revisit these lows. That is just the way the Japanese yen has been trending for a period of weeks now. You've just had impulsive drops, pullback plays, don't break overall structure, and continue down. There's no point fighting that. But what you have to understand is there's a high probability that when the Japanese yen is in a pullback phase, that most of your yen pairs, EJ, AJ, GJ, is also going to be in a pullback phase, right? You have to be able to play those pullback phases accordingly if you're a scalp trader or an intraday style trader. You don't want to still be buying GJ when yen is showing some short-term individual strength. You're going to be in a pullback phase, right? But what we can understand is we had the pullback, the retest of that lower high, and potential high probability for the yen to continue bearish. So if UK equities stay hot and if the Japanese yen stays bearish, and as long as we maintain above double bottom area 156, I'm still in a bullish bias on GJ. Okay? These are the retest buy areas for the new daily candle I'm looking for. And those would be labeled out in the green boxes. Either we have pullback buys to 156.2 or 156 double bottom at the retest of previous daily highs. Breakout above the bear structure showing a lot more buyer order flow above 156.8 or 157. I'm only looking for sells in two areas. Below 155.8, we have to come back below the previous daily highs. And for this pathway of price for me to change my bias, Japanese yen needs to pick up strength and the UK equity markets need to have a decline. My main bias is GJ buys. Or I'm looking for sells if we come back up to these previous highs and don't break and get a potential another pullback phase from previous highs. Because that's very common as well. Let me give you guys an example of that. When you're looking at market structure trending, right? For example, see here, as you have bullish market structure trending, right? You're having upside plays, pullbacks, consolidation zones, upside plays, pullbacks, continuations to the upside. And every time you go to revisit the previous high or potentially break the high. But here you can see as you had this pullback, you had a very great range to take advantage of as a target back up to the previous highs. But that doesn't always mean that you have enough buyer order flow to break above that previous high price point. So sometimes if you don't cleanly break above the previous high and you don't have enough buyer order flow to continue the move, you can get a double top, which you see technically as a double top, and another pullback that doesn't break structure, but that's what I mean. Right? You can see something similar here as well. It's not a huge pullback or correction, but you get a large pullback if you don't cleanly break the previous high. Right? So those are the trade ideas I'm looking for for GJ. For GBP USD, same idea on the intraday time frames. In the short term, we have some US dollar softness. And at these highs printed, we've had a pullback phase, but this is the last price sensitivity area that we would need to break below with US dollar strength for me to sell GU. Okay? Otherwise, from this low printed, the same time that dollar index has been in a pullback from its highs, like we observed the US dollar movement, GU has been in a pullback from its lows. Overall, trending potentially bullish to revisit these highs if the US dollar remains soft, right? So what we can see here is in terms of price action and market structure, this is the only area I would sell GU. So GU is at a key decision point. If we have intraday candle closures below 1.374 and US dollar strength above 93.9, then I'll sell GU. Otherwise, I'm still looking for GU buys above this structure 378 to take up to this range. But GU is at a very key decision point that is 100% dependent on dollar movement. UK equity decline, break below 1.374. Dollar index break above 93.9. If we have these confirms and the technical confirms here and we don't break this bearish corrective structure, right? For example, if we do this pullback, then come down and break below here and get these confirms, it is a great range to take from 1.374 down to 1.37 flat, 1.369. But right now, the US dollar is at a key decision point. and I'm only looking for the buys, I'm not touching this range. This right here, I'm going to mark it in yellow, is a no trade zone. Too much ranging, too much indecision here. At the same time we're waiting for clear bias on US dollar movement, which most likely we're not going to get a clear bias on US dollar movement until tomorrow New York session, 10 a.m. Eastern, when we have the consumer confidence report to show us economic activity from the consumer perspective in the US, as well as the new home sales. If that data is really good and shows us that economic activity from the consumer side is still high confidence, still very strong, and home sales in terms of the real estate market is still very strong as well, then dollar will have will break above 93.9, have that strength, and GU will run this move. So to add on to here as another step, as I'm remembering now, for extra confirms, okay, these are the technical and fundamental confirms for me to take GU sells. I'm not touching this zone from 374 to 38, and I would only take buys if dollar continues bearish and doesn't break above 93.9, and we have a break above 1.378 in this bearish market structure with potential revisitation of these highs as target points. So GU is at a very key decision point, fundamentally and technically. The same time, dollar's at a very key decision point when we're trying to confirm, is dollar still in pullback structure or are buyers back in play, right? So make sure you guys watch the start of this webinar where we gave that full breakdown. Now, EURUSD as well as USD Cad are going to be following a similar analysis to this, as they have such close ties to US dollar movement because it being the world reserve currency. Okay? EURUSD, we can see though, on the higher time frames is a lot more bearish. Okay? The US, and the reason for that is I'll explain right now. So over the last couple of weeks, you guys may have noticed like GJ's been on fire. The main reason for that is that over one of the weekends, I think, don't mistake me, don't quote me on this, sorry, because I might be making a mistake of when it exactly was, if it was 2 weeks ago or 3 weeks ago now, but on one of the weekends, Bank of England speaker Bailey, Governor Bailey, gave hints towards interest rate hikes to come for UK economy. This is obviously an extremely bullish factor for GBP, and as soon as markets opened up, investors started to price this in. So GJ was on a bullish tear over the last couple of weeks, pullback buys, breakout of high buys, just continuing up, very nice and clean, right? Compared to EURUSD or EUROJPY, which has not been as aggressively bullish compared to GBPJPY, because the Euro Central Bank is still keeping a relatively accommodative stance, which means that they're not aggressively looking for interest rate hikes compared to the Bank of England, or they're not aggressively talking about tapering compared to the Federal Reserve. So Euro has been a lot softer. So when I'm looking at Euro here, after we've had this break below this order block and this massive rejection here, with obviously Euro being a lot softer, I'm more on a sell side bias on EURUSD as long as we don't break above 1.6300, right? With potential safer sells below 1.6 flat. This is obviously going to be a much easier path of price. ECB stays neutral. Dollar strength. Okay. we can see that euro compared to GBP against the dollar is showing a lot more seller's pressure and a lot more exhaustion after almost retesting the previous low, give or take that 20 pips, right? We had this consolidation zone, a break below the consolidation zone with a very strong bearish impulsive candle there, canceling out days worth of bullish price action previously. And we have euro still softer compared to GBP. I'd only be looking for Euro USD buys if we can cleanly break above either 1.163 as a break and retest area, as a make or break area, but really the safer buys at this point is confirming any rate hike confirms, signals, rumors by ECB at the monetary policy statement, and breaks above 685. Because compared to other central banks, ECB has been a lot more neutral in terms of how they're going to stop the stimulus. They still want to keep stimulus active. They're not looking at rate hikes anytime soon or even talking about rate hikes or tapering compared to like the Bank of England or Federal Reserve. All right. Now, USD Cad. USD Cad has been on a very strong bearish market structure tear with sellers in play, and still sellers in play as long as we don't break above 1.24 and dollar stays soft. We have what I like to call a double whammy, because if you guys have been watching crude oil commodities movement here, you can see that oil has peaked new intraday highs and has been extremely bullish, going to $85 a barrel. This is a very strong fundamental bullish confirm and correlation for the Canadian dollar. The same time the US dollar has been softer. So when I'm looking at USD CAD, obviously we're entering a consolidation phase here, but just having a consolidation phase doesn't mean a support. As long as oil stays as bullish as it is and dollar doesn't break above that 93.9 price point, then I'm still on a UCAD sell bias. Now, the new daily candle might peak a bit higher, but if we break a bit higher and come back below 2.4, I'm still looking for sells with safer sells below 2.3200. UCAD sells are going to be a lot easier and more evident. Dollar softness, okay? I'd only personally be switching out of my UCAD seller's bias if we break above this last low price point here, which is 245. I'd only be looking for UCAD buys if US economic data is extremely strong tomorrow, oil starts to have a very strong bearish pullback and starts to decline from its highs, and UCAD breaks above 1.245. Okay? Screen froze for a second. But otherwise, I'm still looking for the potential sell plays. We're just having a consolidation at lows being printed, and we need a break above 245 to validate the buys, as well as oil turning bearish. So I'm still primarily in a gold bullish bias, GJ bullish bias, GU short term still bulls as long as we hold above that price point of interest, but laid out both trade ideas as it's going to be dependent on US dollar movement, and then trade ideas shared on Euro USD as well as USD Cad. Last but not least, US stock market index has peaked new all-time highs on the US 30 here. So if we can retest previous highs here at 35,550, I'm still looking for buys. No point fighting the Feds as stimulus is still active for the time being and tapering hasn't fully started yet, of course, and a lot of the previous tapering talks have been priced in, and US dollar is still relatively softer. If we break below 35,550, I wouldn't touch it, but I'd still be looking for better risk versus reward buys at 35,200. All right, everybody, I'm getting tired of talking. Full fundamentals and technicals shared in terms of economic events, news headlines, market sentiment. We broke down equities movement, Japanese yen, volatility index, US dollar. We broke down some economic events from last week, the economic events we have to focus on overnight and this week, fundamentals in focus, technicals and trade ideas shared on gold, GJ, GBPUSD, EURUSD, USD Cad, and US30. Please make sure as a manual retail trader, you always follow your trading plan. You stay emotionally neutral. You focus on the risk management and the probabilities of the game rather than being right or wrong or trying to feed your ego. And I'll see you guys Wednesday morning, 7 a.m. Eastern for the New York scalping session. Make sure you guys rewatch this. And also do me a favor, comment on the save stream after. Helps with the YouTube algo. And I will see you guys later.